Most of us are dealing with a constant, slow drain on our finances. We pay high interest rates to banks, risk our capital in volatile stock markets, and are forced to liquidate our hard-earned assets the moment an unexpected health crisis hits. Wall Street and traditional banking institutions thrive on this exact setup. Financial advisors push 401k plans and mutual funds because those vehicles keep your capital squarely under their management, generating a lifetime of fees. We are taught that life insurance is just a morbid monthly expense. We think of it as a payout that only matters after we are gone, offering zero utility while we are actually alive. That perception is a relatively recent invention for the middle class. For over a century, elite families have treated specialized IRS-protected life insurance as their own private banking system. The Rockefellers used this precise mechanism to maintain immense liquidity across multiple generations. Walt Disney and J.C. Penney tapped into these same cash value policies to fund their corporate empires when traditional lenders turned them away. They did not beg a bank for a loan. They structured life insurance to operate as a massive capital reserve, keeping total, centralized control of their own wealth. A properly built policy does three things simultaneously. Pillar 1 is protection. You secure a permanent, tax-free death benefit that guarantees your family's income is replaced and their debts are cleared. Pillar 2 is access. The coverage does not sit dormant until you pass away. It stays active, functioning as a liquid healthcare safety net through what are called living benefits. If you are diagnosed with a critical condition like a heart attack or stroke, suffer a chronic illness, or receive a terminal diagnosis, you can pull a tax-free lump sum directly from your death benefit. You can spend those funds on absolutely anything, from experimental medical treatments to simply replacing your lost paycheck. Your policy acts as a firewall. It shields your retirement accounts and your home equity from medical bankruptcy. The final pillar is wealth. To build it, we use a specific vehicle called an Indexed Universal Life, or IUL, policy. Your cash value inside an IUL earns interest based on the performance of a market index, like the S&P 500. You are market-linked rather than market-invested. This graph shows exactly how that protects your capital. When the red line drops during a recession, the blue line flattens out at exactly 0%. You do not lose a single dollar of your principal or any of your past gains. Look at the recovery phase. While the index spends years just trying to climb out of the hole, your account marches upward from its protected position. Every year, your new gains are locked in. The IRS codifies this structure under Section 7702, allowing all of that compounding growth inside the policy to happen completely tax-deferred. By mathematically eliminating sequence of returns risk, you capture the high ceiling growth of a strong market with zero downside exposure. This brings us to the infinite banking concept. Instead of depositing your wealth into someone else's institution, you build your own. When you need capital right now, you ask a bank for a loan. They charge you interest, and that money leaves your pocket forever to pad their balance sheet. As your IUL builds cash value, you bypass the bank entirely. You take out tax-free policy loans directly against your own account to buy a car, fund business operations, or handle an emergency. This animation illustrates the real power of the strategy. Because the policy itself is the collateral, your actual cash value never leaves the vault. It continues to earn interest on the full balance, even while you have a loan outstanding. There are no credit checks and no loan officers to impress. You decide when to take the money, and you return it to your own vault on your own schedule. You use this capital to finance heavy equipment, manage corporate payroll, or fix a leaky roof without ever touching your 401k. You are simply recapturing the lifetime of interest payments you normally surrender to traditional lenders. There is a caveat to all of this. This requires discipline. It takes 10 or more years of consistent funding to maximize your cash value, making it a long-term wealth tool, not a quick flip. That is the trifecta blueprint. One single policy delivering guaranteed family protection, living benefits for major illnesses, and a tax-free personal banking system. You cannot just buy a standard policy off the shelf. It has to be meticulously engineered to minimize agent commissions and accelerate early cash value, which requires a highly specialized broker. First Freedom Life is a veteran-owned, independent brokerage. They shop multiple AM Best A-rated carriers nationwide to custom design this exact system for your goals. You can see exactly how a trifecta policy would look for your family by taking their 2-minute, no-obligation qualification step right now. Stop leasing your liquidity from a bank, build your own system, and take absolute control of your financial future.